Hey, good afternoon, everybody. This is Dennis Wilburn with the Active Trend Traders. Welcome to all the folks who have joined us on Facebook Live for the streaming market update. Let me get my slides up and we'll take a look at what the market's doing to us and for us as we go into this first, well, after the first full week of trading in December. Stand by just a second. There we go. And my have to find my controls here. There they are. They slide into different places every time we take a snapshot, so you have to excuse me for that. And the chat is up. Go Army. No, it's go Navy, beat Army, David. And so, okay, I'm going to be paying attention primarily to the chat box today rather than paying attention to the actual questions and answers. So if you have a question and an answer, put it in the chat box for me. I do not have an administrator who's watching the session with me, so just if you'll do that for me, I'd really appreciate it. So as I was saying earlier, the market is just kind of like flashing all kinds of signs of weakness, but at the same time that it's flashing those signs of weakness, is it setting itself up for a, finally get us into a bounce to go into the Christmas rally? We shall see. I want to welcome everybody to the Making Money Trading Stocks, Options, and ETFs for this weekend. We do this session typically every Friday during the year, and we try to come on about 11 o'clock on the West Coast, and then stay on for about 15 minutes. So I want to remind everybody that all materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication of future performance. I partner with my son, Brandon Wilborn, who basically has, after he was graduated from college, he basically worked with me for several years, since about 2005. He is a really good technical analyst, and he also does a lot of back testing. He is the big driver for our new service called MAPS, for those who don't want to just sit there and watch their computer all year long or all day long. MAPS is an opportunity to highlight and hone in on the specific market lows and some other extra bonus trades throughout the year. I want to remind everybody that, discipline is a key that turns knowledge into wisdom. Nothing is, has ever been less true than this statement when it comes to trading. Those of you who are, who have, in fact, who do trade for a living, or trade a lot, you basically know this, this situation very, very well. You know how we can have all the knowledge of how the market works and all that kind of stuff, but until we actually get in there and start putting it into effect, we don't develop the wisdom to go with the trading. Just sitting there trying to get there's that. I am not seeing, hold on just a second. I am not seeing my participants. And I would like to be able to see everybody. Okay. And for whatever reason, it is not showing them to me, so I'll just trust that you guys are out there. And if you have any, again, if you have any questions or anything like that, just put it in the chat box, and we'll see that going forward. Okay. Okay, so let's get on to the rest of what we're doing. The objective of today's session is to basically cover timely, actionable intel review at the end of each week. The question I come in with at the end of this week is what is going on with the markets? We see, of course, that the markets did in fact do some a big kick up at the beginning of the week, with the good news that there's going to be a delay of 90 days before any type of negative action takes place on the Chinese trade wars. But then that didn't last very long. When we take a look at the chart, you'll see that it popped right up into a level of resistance and just stopped. And then the selling started from there when we came back on Tuesday and then Thursday, of course, because Wednesday was no trading. So are we setting up for a Santa Claus rally or not? You know, we don't know. Right now, the charts are not showing us anything really all that favorable. There's a lot of angst out there having to do with the inversion of the yield curve. And people are trying to calm down the folks saying, hey, you know, don't worry about the yield curve, because typically what takes place is with the yield curve, it's somewhere about 19 to 28 months after the yield curve inverts. That's when there's the strongest potential for a recession. So we're going to find out, if that turns out to be the case this time. Could it be different this time? Sure, but it is very much showing this angst level of just quick, I want to sell it, I want to get out of it. Very much shows us that we are in a rumor-driven market right now. And so in a rumor-driven market, we have to be very careful, because the prices can be really whippy and take us out of positions because of the wide swing, the volatility. So the best thing I can do to suggest is look for the levels of support, look for the levels of resistance, and trade against those areas. Then we'll take a look at the stocks, the ETFs that we do watch, and the bonus trades we are watching also. So since we met last week, the Dow and the S&P have turned negative, both for the year and from last year's high. NASDAQ composite still hanging on there with 4% and 2% gain. The Russell has turned even more negative as we take a look at that, and has dropped almost 5% for the year. Active trend trading, we're almost totally in cash right now, except for one position, and so we're sitting on a 33, a little bit over 33% gain for the year, and that's I'm quite pleased with that. And now we're just sitting there trying to be really, really patient prior to being able to being very patient prior to actually starting to inch our way back into the market. One thing I'm really pleased with the active trend trading system has done is it's kept us out of the market when we shouldn't be there, and also protected us with the proper stop losses, that kind of stuff, to keep our losses extremely small. So let's take a real quick look at a couple of entities. Let's go over here. There we go. Okay, let's take a look at, normally I don't look at the Dow, but let's take a look at the diamonds, which is the ETF for the Dow, just to see what's happening with that. As we can see, this week, this is a weekly chart on the left, daily chart on the right, and as we see for this week, what has happened is the Dow the Dow has, in fact, let me see if I can, one of those kind of days, guys. Draw on screen. Yes. Why am I not seeing you over there? Okay. There we go. What has happened with the Dow is the Dow has basically started up with a big gap up on Monday, but then the selling started. And where did it gap up into? It gapped up exactly into resistance area, then started selling up. Tuesday sell-off, Wednesday no market, a nice bounce yesterday. What looked like, hey, maybe this is the reversal day that we're all been waiting for. No, didn't happen. And then reversed back down from that as we see. And now what is it doing? It is testing the levels of support that we found back at the beginning of the year. Now, it has not closed below these levels of support, so that's still positive for the Dow. However, if we drop, let's go over to the S&P, the spiders real quick. Here's what I was looking for. Okay, let's go over to the spiders really quick. And it's showing us kind of a similar type pattern as we see here, where price action is coming down into the support level. So 260 is the strong support. There's a little bit less strong support up here, about the 262, 263 level. We push on down and break through that and close below it. What we could anticipate would be a retrace back down to this level. Just take these candlesticks, that level there, and then back into a support level around 240-ish. Could we get a bounce back up and a drop that way? Certainly we could. That's exactly what has happened over the last couple of months. In October, we get a rebound up into resistance. After this reactive move down, up into resistance. Pull back, rebound, thinking, okay, this is where we're going to go back into our big month, end of year run. Didn't happen. Back into resistance above the moving average. So that was kind of a fake out. But that candlestick that we saw on Monday was basically a hanging man, bearish type of signal. And now we're going back down to retest these levels here. We're seeing something similar on the Qs. It's almost like I don't have to move the chart because it's gone through a similar type process. I'll erase that just really quickly. Now the Qs themselves actually came down, made a new low on the 20th of November. It appears as if it may go back down to that low. It is working within a channel, so the channel line could actually be down here around the 150 level, 149 to 150, as a potential downside target. We'll see if that in fact does take place today. Over the next couple of weeks. Channel pulling back down. What are some of the positives on the Qs that we see that could set us up for a year-end run? Well, one, the TSI weekly chart showing the formation of a potential inverted head and shoulders that we want to keep a look at that could in fact bounce back to the upside, which that would be an excellent, that would be a good thing also. But where would it bounce from? I kind of like the level of 156 to 155, or even down here at the it's about 152, 150, about the 154 level. And if it bounced from the 154 just back up to the moving averages, how much of a bounce would that be? Well, let's do an approximation of it, and you get that's about a 9% bounce. So if you're trading the leverage ETFs on this, you may be looking at about a 27% bounce over a very short period of time. It's gonna, if the market continues to act the way it's acting, it is going to be very rapid, quick and fast to back up to the upside. Typically taking less than 3 weeks. IWM. IWM, what's different about IWM and the Russell is, as you see, we are breaking back down below these past lows, which that is often the sign that, hey, we are going down even further, which may take us down to past support at right about there, about 142. Or we could even test down here at the 135 level. and then do a rebound back up to the upside. Keep your eye on a couple of things. One, middle section of this week's candle, 149.43, 40-ish. That would be a level where you could expect maybe a bounce up to that level, reversal to move lower. It is clearly in a downtrend. What's your TSI? As you can see here, we are pushing down further. TSI on a daily chart is still pointing in a down direction. TSI in a weekly chart showed that it wanted to bounce, but it's just kind of doing one of these bump, 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 not giving a lot of direction, just lingering around the bottom. Now that could build up pressure where it finally bounces and moves to the upside, but again, similarly to the NASDAQ, is if we get a, let's say, a move back up from approximately this level here, back up to the upper trend line within the next couple of weeks, what kind of a move would that be? Well, about a 6 to 7% move. Again, with TNA, that would equate to about a 20% move in a very short period of time. So that's what's going on with the indexes. I wish we could say, oh, everything in the index is really great, it's wonderful, it's good. It is, because eventually it is going to give us a really good opportunity to buy, but we just don't know exactly when. If you're concerned about the yield curve, just trade the charts that you see in front of you, and we'll move forward from there. So I'm going to cover two last things on this. One is Tesla. Kind of interesting that Tesla, they're kind of looking like they're trying to push Elon Musk out of doing the day-to-day business with Tesla, which may be a good thing for the stock itself. But just keep an eye on this. Look what we're getting here on a Tesla chart. One, we get all the way up to 380, past levels of resistance, 380-ish. Getting a shooting star type formation on the daily chart. We'll see if we finish that way, because what that may spell for us going into the end of the year, especially if we have other market weakness, is Tesla doing a drop from here. And where might it drop to? Down to either the 20-day moving average, the 34-day moving average, or all the way back down to the Keltner channel, which would be a excellent place to go. Again, this may be the initial part of a backward downside. We're getting negative divergence going here compared to positive move to the upside, negative divergence on the daily chart. The other thing, keep an eye on, it appears as if gold may be finally starting to turn around. We'll see. It's been a real pain in the butt to try to pick up a trade on gold, but it looks like it's approaching a level of resistance where you may get some kind of a pullback. And if we are going into a end-of-year run, we would expect a pullback to come back into 117 or even into the moving averages before bouncing higher. So that's what we have for gold. And then oil. Is oil going to bounce from where it's at right now? USO, as you can see, USO, this very similarly to what is happening with oil futures. Oil futures are sitting right now at about 52.70 per barrel. Could go as low as 40-ish, but again, it appears like we are hitting on a level of strong support. Hammer today. Daily, the weekly chart starting to show a little tick up on the TSI, three-line cluster on the market forecast, which could spell for us going into next week, or within, this is a weekly chart, so within the next 1 to 4 weeks, a reversal on oil and a tick back up to the upside. So that's what I'm looking at from the aspect of the charts we're seeing, folks. Let's run along here. I said, beware of catching the falling knife. I've closed basically strategy 3 positions out with the exception of XOP, and I'm using that as a training opportunity to show folks how the strategy 3 works. We gained $308 in XOP credit positions that we sold last week. And then, hey, tomorrow, if you're hanging around and looking for something good, I'm going to talk about the 5 steps to more profit in 2019 at the Bay Area Moneymakers. That's the BAM meeting, and that is a webinar. You can join if you would like a link for how to pay your dues on that, so you can hook up. Just send me an email, let me know. I'm doing streaming webinars on Facebook on Friday and Monday. Monday is one that has no invitation. It just basically, if you want to find out and get your invitation there, you just need to sign up with Messenger. You'll get a special indication of how to do that. Premium webinars that we do on Wednesday night for training. And here's one of the things, the LABU is one of our Magnificent 7 ETFs. It is the biotech bullish ETF. It basically just, one of the reasons why we have honed down to 7 Magnificent 7 ETFs is because they tend to have these kind of runs multiple times throughout the year, 1 to 2 times a year. They will, or 2 or more times per year. They will have runs somewhere, about over 20%. That's one of the requirements of making it onto the list. Now we're just basically working on waiting for the triggers and then putting our trades. Premium members with active trend trading get these, the alerts on these, both text, messenger, and email alerts. Which brings me to, hey, I don't know how much longer we're going to have this particular special on board, but the special is become a premium member. Prices will never be lower than this. Get, your bonus is, here's your password to utilize this website here to log, to get on board and take advantage of this price point. Again, prices will never be any lower than that. So seasonality, what we're looking at, we're in this time of year. Are we going to get this last run into the end of the year? We're waiting for a bottom signal, a reversal signal to basically try to get into a trade with the anticipation that seasonality is going to take place. Crude normally does a little bit of reversal at the end of the year. Will that happen this year? Builds on into January, then drops. And so crude has really followed this chart fairly succinctly for 2019. Big sell-off that started in October. And while people were really kind of gnashing their teeth about it, it was normal. Seasonality in gold. Normally, we're in this part of the year also. Typically, we'll get a little bit of tick up, and that's that might be what we're seeing right now. So, hey, that's all I have for today, folks. 2019, I'm already putting together the plans for 2009. I anticipate it to be a year of completion. If you're a premium member, I'll be up at the top of the hour for the final hour. And so, remember, hey, this is Pearl Harbor Day. And living so close to Pearl Harbor, it's a constant reminder of the sacrifice that happened on that day back in 1941. And so just, as Americans, we can always remember the people who died for our freedom, that give us the ability to do what we're doing right now. So, hey, God bless everybody. Have a great afternoon and a great weekend. And we will talk to you next week. Looking forward to that Santa Claus rally starting soon. So God bless everybody. Aloha.